Hey guys, SGT here. Hey, I'm really excited to have on the line a very special guest today. It's James Anderson, the Managing Director over at goldsilver.com. Now, Mike Maloney is going to be joining us in the next week or two, and today he's a little bit under the weather. So I'm really grateful in his place to have James Anderson. James, thanks for joining us.
Thanks a lot. I really appreciate what you do, by the way. I think you do a wonderful job, and it's very commendable.
Oh, that's very, very flattering. Thank you so much, and we feel the same about the work that you guys are doing over there. Let's talk a little bit about the fundamentals and the manipulation that we've been seeing in the market. There seems to be a school of thought out there from the mainstream media that I think is infusing and finding its way into sort of the alternative media and even some of the YouTube crowd, some of the people that might make the argument that what we're seeing isn't manipulation. What we're seeing is the market and the COMEX reacting to the need to raise margins, and it's all normal, and this is the way it should be. A friend of ours, BrotherJohnF, did a video the other day talking about the fact that 5,000 options contracts changed hands in like 1 minute, which was the equivalent of 25 million ounces of silver in 1 minute. How do you interpret this type of crazy paper activity?
Well, 25 million ounces of silver is a boatload of silver. Right. If you think about it fundamentally, like how hard that is to yank out of the ground, the fact that they're trading that in milliseconds, that just speaks to the volume of leverage that's out there. Right. People are on record stating 100 to 1 leverage. I think it was Jeff Christensen who did that.
Right.
And let's just say he exaggerated. Let's just assume he just doubled the exaggeration. Okay. So just say that leverage is like 40 to 1. That's ridiculous. If you ask any banker what's a ridiculous amount of leverage, I think once you get over about 20 to 30, it's really risky. When it gets over to that level, basically you're trading a bunch of derivatives, a bunch of paper, derivatives, and in the end, we really don't think that, of course that has a short-term effect on people. The price changes and it moves up and down, but in the longer term, we really think that the physical and the paper market will separate again, where prices can go one way or another, but the physical market is what really will be running the show.
I agree with you, and I think what's fascinating about quantifying some of that paper activity and saying, as BrotherJohnF did in his video, that one spike in 1 minute of 25 million, of the 5,000 options that represented 25 million ounces of silver, it just puts things in perspective, because the Sprott Physical Silver Fund, I think when Eric Sprott tried to secure his silver, it took him 3 months. So, here we see, that amount of silver changing hands in a minute, and you just realize how ridiculous this is and how truly precious physical silver is. Yeah,
that's like 3% of the mine of silver for the entire year just happening like that, That's ridiculous. So it like you said, it speaks to the fact that this is a paper charade, and that in the end, what will be reflected back at you is whether or not, you have silver in your hand or you have physical gold. Long term, that's where we're headed. It's he who has it's going to make the rules.
Yeah. And I really do enjoy the technical analysis that's brought to us in some of the YouTube videos. Again, some of the work Brother John has been doing, Endless Mountain, Stella Concepts. What do you make of this short-term correction and where we're headed?
I think anybody who buys silver below $50 an ounce is getting it at a sale, getting it at a ridiculous price. Because
right.
As human beings, really, we get to 50 and we look at one another and we just say, well, that's the 1980 nominal high, and that is a nominal high. $1980, those are a lot more powerful than $2011.
Right, you're right.
So we simply just look at one another and we say, well, 1980, who cares? Those dollars were powerful. These dollars are pathetic. You were talking peso dollars. The money supply explosion is ridiculous, and it's all fake money. What's the price of the real money? Oh, it's below 50? Well, give me some, because that's cheap. That's basically how I look at it.
The true inflation-adjusted all-time high in silver right now is $138 or $140 an ounce. So anything under 50 really is a bargain.
And that's if you're using their statistics, correct?
You are right, because John Williams would say it's closer to 436.
Yeah, as Mike Maloney would say, if you're using the CP lie, right, we're talking 138. If you're using John Williams's hard statistics, you're talking 200s, 300s.
And what kind of action are you seeing over the past 2 weeks with this massive 30% quote-unquote correction? I would call it a managed correction. I would call it a deliberate correction. I would call it a takedown. But what kind of action are you seeing? You guys are in the business of selling silver and gold.
It depends, right? It depends on the investor. Some people, they understand the fundamentals. They get in this market. They've done their due diligence. they know the game and they know it's rigged, and that basically the jig is up, and that eventually they will win if they just hold their bullion long term. They don't get shook at these prices. They see the price pull back and they get excited to actually add to their position. There's other people who come around who see a price move and they get excited because, hey, there's something happening and I want to be a part of it. Yet they haven't studied the fundamentals. Those guys get shook out all the time. And they call, they'll call us up and say, I want to cancel this and that. And that happens. People who didn't study the fundamentals, they don't understand why they made the investment in the first place. Those types of people, they do come around, especially when the price starts making headlines. So, what we notice on the ground is the sad truth of this, is that the majority of people out there, they chase price. They see a price go up, they run after it. Okay. There are those, and there are a lot of them, who are smart, and the price pulls back, they are the ones who are buying in six-figure, seven-figure amounts. But when the price is moving up, we see a lot of the smaller guys chasing the price.
Okay. And we see a lot of delays in delivery from Gainesville and APMEX, as long as a month out to get delivery on Eagles and some of the other more popular coins. What are you guys seeing in terms of availability and any sort of delays?
At goldsilver.com, we have delays on some of on almost every silver product except for the 100-ounce bars. Those are pretty ready to go, and the premiums on those are excellent, by the way. The rest of the premiums have risen on every other product. And it pretty much started earlier on this year with the U.S. Mint moving up their prices, and everyone's kind of followed suit as far as coins go. The Maples and the Philharmonics, they're starting to go up a little bit more in price. As far as deliveries going, the inventory's tight. It's just that's the name of the game. The silver market there's just not that much supply, and the demand is such at this point that it's obviously the lines are getting longer. And if you think these lines are long, just wait until the real stuff hits. That's the thing that I don't think people really understand, is that the infrastructure in this industry, the infrastructure for people to physically get bullion in their hands is pretty fragile. And if we multiplied this out by what we believe is coming, which is like a 5-10-fold in investment demand, well, chances are very high that some of these infrastructure will break. So, the question is, are you going to take care of yourself before it breaks? Are you going to make sure that you don't, you're closed out where you can't actually get, physical investment grade silver in your hand? Yeah. So, it's just anybody who's out there who's kind of on the fence. Like I said, I think that having ounces is what matters. What it's valued in some fiat currency that's on its deathbed, that doesn't matter. The question of this game is how many ounces you got.
Yeah. Yeah, you're right, and I think the exponential explosion in the interest people will have in getting into physical assets like gold and silver and platinum and palladium and land, and I think you're right, it is going to explode. I want to quote this from the new CPM yearbook that was just released. Quote, the value of investor silver holdings was estimated at $14.7 billion at the end of 2010. On a global basis, however, the value of these assets represents 0.007% of total global financial assets. That's incredible, isn't it?
Yeah, it is. It is. I mean, look, the further you study the facts, when you delve into the numbers, it's just amazing how much currency, how much fiat currency, basically backed by nothing papers out there compared to the real stuff, that historically has been money. Mike Maloney, he has a great DVD. It's called Why Gold and Silver.
Sure.
A lot of it's for free online. You can find it. There's one section where he talks about, how much gold is out there for investors, how much silver is out there for investors. A lot of people who are new to this market, they have no clue, especially people in the street have absolutely no idea that investment grade silver is a lot harder to get than investment grade gold. But just in the general, in the big picture of it all, how much gold is out there for investors, how much silver is out there for investors, versus how much dollars or euros or yen or any type of other paper assets denominated in those fiat currencies. I mean, there's no comparison. It's just such a small pile that's out there as far as the gold and silver is concerned versus other asset classes.
Yeah,
minuscule.
It truly is precious. I mean, and people need to remember that when they refer to gold and silver and they're called precious metals, they truly are. I mean, they really are rare. Look around, drive around your town sometime on a Saturday, and you try to find a place to go buy silver. Maybe you find one coin shop, maybe you'll find a pawn shop. But can you imagine any normal-sized city like the one I live in with over 1 million people, if everybody decided they needed to go buy a couple ounces of silver? There would be no way to buy it. I've made this point before. There is only one goldsilver.com. There is only one Amex. There's only one Gainesville. There's only one Miles Franklin. I mean, there's over 1,000 Target stores in this country, and none of them sell silver. So it is really, really rare, and people have to interpret this as you get a 30% discount from where it was 2 weeks ago.
I completely agree. I mean, it's on sale, folks. Just make sure you're getting your ounces. That's week in, week out. Save some of your currency from your check, and just have discipline and just keep buying ounces. Just keep stacking.
This concludes part 1. Click here for part 2.